This video is presented to you by Third Richardson Group LLC. Outcome of Fed meeting. Market to undergo another raise in rate. Background. The global economy runs on money. So when the cost of money in the form of interest rates rises rapidly, growth may slow sharply or even give way to a recession. Whether these consequences mean rates rose too quickly would depend on the particular economic circumstances, including an assessment of the cost of raising rates more slowly. Most U.S. recessions since the Great Depression have followed interest rate hikes by the Federal Reserve. Often the ensuing downturn has forced the Fed to reverse course and start lowering the federal funds rate. Rapid rate hikes are the likely central bank response to high inflation that might have been fueled by the easier monetary policy adopted earlier. There is no one-size-fits-all measure of how quick is too quick, and no way to know whether policymakers have made optimal trade-offs between growth and inflation except in hindsight. Even after the recent bout of turbulence in equity and bond markets, Fed funds futures are still pricing a substantial tightening of monetary policy by the U.S. Federal Reserve, or the Fed. Fed funds futures are pricing 4 or 5 rate hikes in 2022, followed by 2 or 3 more in 2023. In the view of investors, the Fed is most likely to have rates at 1.625% by the end of 2023. Understanding interest rates. Benchmark interest rates set by the Fed and other central banks affect borrowing costs for governments, businesses, and consumers. They are monetary policy's primary tools for ensuring maximum employment and modest inflation, and among the most important determinants of the pace of economic activity. Gradual increases in rates give everyone from homebuyers shopping for a mortgage to CEOs evaluating a big debt-financed investment time to adapt. If rates rise too quickly, they may disrupt economic planning, discourage investment, and unnerve financial markets. U.S. Fed FOMC announces 75 BPS rate hike to 3.75 to 4%, highest since 2008. The FOMC holds 8 regularly scheduled meetings during the year and other meetings as needed. The U.S. Fed Reserve FOMC meeting for November 2022 is taking place on the 1st and 2nd of November 2022. The Federal Reserve on Wednesday raised interest rates by 0.75 of a percentage point as it continued to battle the worst outbreak of inflation in 40 years, but signaled future increases in borrowing costs could be made in smaller steps to account for the cumulative tightening of monetary policy it has enacted so far. The U.S. Central Bank has raised rates at its last 6 meetings beginning in March, marking the fastest round of increases since former Fed Chair Paul Volcker's fight to control inflation in the 1970s and 1980s. The Fed is data dependent. That is the sole message traders need to take from the critical rate decision. The central bank raised borrowing costs by 75 BPS for the 4th consecutive time, but markets were already looking into December. That explains the cheerful market reaction. Effect of the Fed decision on stocks. Stocks dipped on Tuesday as traders assessed better than expected economic data and prepared for another likely rate hike from the Federal Reserve. The Dow Jones Industrial Average fell 79.75 points, or 0.24%, to 32,653.2, while the S&P 500 slid 0.41% to 3,856.1. The Nasdaq Composite shed 0.89% to 10,890.85. All the major averages opened higher, but turned negative after job openings in September showed a resilient labor market. The news heightened fears that the central bank may keep its aggressive stance as it fights to tame high inflation. Anytime you get good news, the market doesn't like it because it just means that the Fed is probably going to be tightening more and potentially for longer, said Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research. We're still in the bad news is good news cycle. Tuesday marked the start of the Fed's November meeting, which may expect will result in a 75 basis point interest rate hike on Wednesday. Investors will monitor the central bank's statement and Fed Chair Jerome Powell's press conference for signs of a slowing tightening pace. Some losses were mitigated Tuesday as a better-than-feared earnings season continued with a strong report from Pfizer. Uber shares popped nearly 12% on a revenue beat. Companies this season have grappled with high inflation, raising rates, and a strong dollar. Wall Street is coming off a strong month of gains. The Dow rallied nearly 14% in October, its biggest monthly advance since January 1976, as investors rotated out of technology and into stalwarts like banks. The S&P 500 and NASDAQ Composite added about 8% and 3.9% respectively.